Hi, everyone. If you are just joining us, I just let a whole bunch of people into the webinar session. We will start this in about 1 minute and let everybody get on. So everybody's 3 o'clock meeting that ended at 4, they have a chance to dial in at 4:01. So. Okay. Great. It's 4:01, and I want to welcome you to what seems to be a twice, 3 times weekly webinar that we've been putting on here at CAMEO. Today, we're going to talk about the Payroll Protection Program participation. And just for fun, I almost added the word plus, but decided to stop with the alliteration. So that's what this call is about. What a couple of Zoom tidbits. Everyone's audio is muted. In case you're looking for the mic icon, you drag your cursor down to the bottom of the screen. You should see a mic icon on the left. The default is mute. If you want to ask a question a little bit later on, unmute yourself. And there is a chat box that we are watching. We are recording this meeting, so we will make it available for you to share hopefully by tomorrow afternoon. We'll send everybody a registrant. We'll send all the registrants a link as soon as we can. And we're happy to send the slides. And I also have some other resources that I'll be popping into chat for you. All right. Just a note about our training. We have a webinar, our upcoming listening session on Wednesday. It's going to be what's new in federal/state help for small businesses, as well as some, whatever anybody else would like to talk about. We are also holding our Bringing Your TA Online. We sold out the first class, and we have now officially sold out the second class. It will start on this Friday at 2:30. We do have a wait list, and if it's anything like the last class, we might be admitting people from the wait list. So please do sign up for the wait list, and I will pop the link into chat by the end of this webinar. And also Friday, our CDO is a monthly call to help people build their loan programs. If you're interested, you can email me, and if one of my colleagues so graciously would pop into chat my email address, that would be fantastic. It's H. Pickman, P as in Peter, ICKMAN, as you can see on my video name, at cameonetwork.org. So, what we're going to talk about today, we're going to do we have Mark Quinn with us in the house. A lot of you might know him. He used to be the San Francisco District Director of the SBA, and he's been working with CAMEO for the last couple of years as our senior advisor. We're going to talk briefly just about the debt relief, just to make sure you know what's going on regarding debt relief. We're going to be talking about changes in the EIDL programs, what's new, what since the last time we talked about it. PPI for lenders, PPP lenders. What are the eligibility and considerations to consider if you're going to be a lender? What the process is, and a little bit about the like whether or not you should get a PPP or get an EIDL. EIDL, for those of you who don't know by now, is the Economic Injury Disaster Loan Program for the SBA. So with that, I am going to turn it and welcome Mark Quinn to the microphone.
Thanks, Heidi. Let's see. I'm going to follow Heidi's slides here. The first most important thing is that this is a continuing dynamic process, and things that are in place now have changed and will change going forward. And you should expect to keep track of things, because some of the ways in which applying for the programs and the provisions of the programs seem to be continually changing. So just like everything else around us, this is a dynamic situation, so a lot of things change. I figure we'd start with really the first and easiest thing, which is just a reference back. So for any of you as TA providers or microlenders in particular, just to make sure that everybody is aware of kind of the status, there is a debt relief piece that is out there that hasn't gotten a lot of attention because it doesn't seem to be something you apply for, and you in fact don't. It is something that your SBA lender, either a 504, a 7A lender, or a micro lender, should be letting people know that the next 6 months, SBA will be making payments on their behalf, and those payments will not be considered income to them, so there wouldn't be a taxable impact on that. But I've seen it on the SBA website speaking about 7A. I've seen it in the legislation that speaks to 7A 504 microloans. I see that a couple of different things that have been stated on that. My understanding is on the 504 second, if you will, the SBA 504 piece of a 504 loan, which includes a first mortgage and a 504 second. That would be paid by SBA for 6 months, along with the 7A payments and fees and microloans as well. My other understanding is that new loans, new 504 7A microloans that are approved currently would also benefit from the debt relief. In other words, the 6 months of payment being made on behalf of the borrowers. So again, that's something that you should be aware of if you are either a lender or your clients have a microloan, for example, or a community advantage loan, that SBA would be stepping in and making those payments on their behalf.
Mark, who should,
yes.
There's a couple questions on that. Who should people call if they haven't heard anything from SBA, read these payments?
As a lender or as a TA provider or a borrower? So I'll cover all three.
Yeah.
As a lender, you should be expecting to hear from SBA, so you should call and get in touch or email the district office that you're located in California. You probably know what district it is. Contact the district office and ask whether that's the case if you're a lender. So if you're a micro lender, you should be hearing directly from SBA. Same thing, my understanding for 7A lenders and 504 lenders, they both are going to be hearing directly from SBA, probably not locally, probably nationally. If you as a TA provider, if your client is one that is getting one of these loans, then they should be in touch with the lender to see whether and how those payments will be made. But my understanding is that those payments are happening automatically. It's not something you have to request or submit anything for.
Okay, great. And then what about previous EIDL loans? I get from a different disaster, I take. Trish is asking from Jedi.
Right. That I'm not sure. That my understanding on those is that they are being deferred, but I don't know that they are being paid. My understanding on that is that the deferral goes through the end of the year, but the payment on the loans is not what I understand. But I will find out on that for sure.
Okay. Are you? And what about new loans that I have on the slide here?
That's a good question. The new loans is also included in this. What's not clear about this is what fees, if any, would be paid for by SBA on behalf of the borrower. That part of it, my understanding is that the payments, the monthly payments, if you will, would be paid by SBA. The fee part of it, I'm not clear whether that would be waiving of the fees or payment of the fees for new loans. I assume not, because I assume it's paid for. In this case, it's being the fees are talking about is ongoing lender fees for 7A, not for new fees, for guarantee fees up front.
Okay, great. Moving on to EIDL.
Sure. I think that for any of the folks that that have clients that are that want to apply for EIDL, you should look at the SBA website because the interface now and the process is now stripped down significantly from what had been the case when we first started this discussion about the way economic injury loans had been done before by SBA and what they're currently being done. So the first thing is, the first fundamental, of course, is for economic injury loans. Those are direct loans by SBA, done by the Office of Disaster Assistance, and you apply online for them. And the process is now a two-step, two-page kind of thing. You go in online, you put the information in online. There's a lot less documentation that's expected to do, and those are things are all pretty much what you would see on the online. The other piece, there's a lot of confusion about if someone had already applied before the CARES Act provisions went into effect. There's a $10,000 advance that is part of the program now. If you had applied before the $10,000 advance, you have to go back in and reapply to indicate that that's what you would be doing. But I would say that for those and there's a lot of particulars about whether if you have applied already and did not get a loan number from SBA, whether you have to reapply because of the change in the process. So people are going to get caught up a little bit in that process. They'll have to work through that. But essentially, for anybody that's coming in for a new economic injury disaster loan, go onto the website, indicate that you are looking for the $10,000 advance, and then also apply for the economic injury loan through the new process. So it's a new process to do that, and they're looking for less information than they had previously been looking for on an EIDL loan.
Mark, there's some questions in the chat box. Is the up to the $10,000 advance forgivable even if the loan is approved? That's the first one.
Yeah. They're pretty explicit about, they've used words that make it confusing. Part of it is because, frankly, SBA doesn't like to use the word grant. So instead we say loan forgiveness and other ways in which we phrase it. My understanding is that if anyone applies, let's just start with the ones who don't get approved for EIDL. If you apply for an EIDL loan, you get the $10,000 advance, and you don't get approved for the EIDL loan, you don't have to pay back the $10,000 advance. That part is pretty clear. If you do apply for it and you do get the EIDL loan, my understanding is that $10,000 is described as an advance, but it's not it doesn't show up to be repaid. So my understanding on that is that it also is not needing to be repaid if you do get an EIDL loan. The way as a description to say it's an advance, it makes it sound as though you're going to get an advance on this, and the balance is something that you would add that $10,000 to. My understanding is that that's being held aside and not being considered to be repaid.
All right, and then it says, isn't the 10,000 actually up to 10,000?
Yeah, it is. I have not heard of people getting less than 10,000. If you apply for less than that, I don't know why you would, but it's described as up to 10,000, and I have not heard that it is somehow being calibrated in some way based on some kind of analysis. My understanding is it's 10,000. If you apply for it, you apply for 10,000.
Okay, it's not 1,000 per employee?
No.
Okay, and has anybody heard of anybody actually getting the advance yet? Type into chat. We'll leave that at that. And how long does it take to release the 10,000 advance?
Well, that's been from the beginning announced as a 3-day turnaround. I have not heard whether it either is or is not, so I don't know whether the 3-day approval and dispersing of 10,000 is something that people have seen. I'm going to have to hear from people as to whether or not their circumstances turned out to be the case. We've heard some other things about the disbursements on EIDL loans that that they're not fully being dispersed right away, and there's some other questions about what the disbursement process is happening. So I'm not sure what the story is out there as far as dispersing either the 10,000 or the regular EIDL balances, but it is supposed to happen, as the legislation calls for. It is supposed to happen 3 days after somebody applies for the 10,000.
Okay, and somebody said, yes, some of our clients have received. That was Leslie Williams. If you could just type what organization you're with. And Deborah, these are not the SBA backed loans. This is not the Wells Fargo money. This is the economic injury disaster loans made by the SBA. This is the economic injury disaster loans. They're different than the payroll protection program, which we will discuss in a moment. So have not talked about the PPP loans yet. Okay. Thanks, Leslie, for that. And then one applicant was rejected, and the message said that the EIDL loan program was out of money. Is that just a glitch?
That's a rumor, and I've heard that one too, and that's one of the points that's what I was sort of alluding to as far as disbursements on EIDL loan. I've heard people who have gotten an approval on an EIDL loan and gotten a very small portion of it dispersed. So with that same comment about fund limiting conditions, I don't know what that is as far as why that would be, so we need to figure out whether that's the case. So I've heard that same rumor today too, that people have been approved but then not funded. So that would be a bad story, so we need to figure out what the story is. Okay.
Yeah. And some of this is to gather your questions and figure out what stories, what you're hearing from on the ground, because information, so we can make sure that we get the information to you as well. So, all right, I'm going to move on.
Yeah, I just, on that last point, I've reached out to the disaster program to find out whether that's the case or not. I don't want to speculate about what the circumstance is on it yet, but I have heard the same story, that people have been approved and then told that there's limited EIDL funds available to disperse. So who's eligible to, okay, you're skipping to PPP. Let me go back to EIDL for a moment, if you will. One of the things to keep in mind, people can apply for economic injury disaster loan for what they see as the duration of the disaster. And let's assume that it's going to be 6 months after the period starting now. And so your economic injury loan is going to be the impact of this disaster on your business for the period of time, the duration of the disaster. That's different than the PPP piece. So for folks who have an economic injury that they see going 6 months, if you will, into the future, you're going to apply, you can apply for both. You apply for the economic injury loan for the longer term impact of this on your business. You apply for the PPP for the 2-month period of time that this covers. So keep in mind that for EIDL, it's a little bit of a different process than the PPP piece, because you're actually saying, here's what the longer term impact of what my business needs to keep operations going for the longer period of time. And this is a loan, it's not a it's not a forgivable thing, so it's a loan, 30-year loan, so it's a longer term loan, but it is definitely different in term than the PPP piece. So there's a lot of confusion that's naturally going to happen here. But I would suggest to people, in addition to the $10,000 issue, it's really helping people understand that they should be really looking to expect what would it take for my business to keep its doors open with or without any revenues for the period of time until the expected end of the disaster. And there's no way to know that necessarily, but I would just say starting with the idea that it's 6 months out and try to figure what it would take to keep your business open. Now, the other part of this that's confusing to apply for EIDL is you would go into SBA and say, here is what the impact of the disaster has been as far as cutting my business and cutting my revenues, but it doesn't allow you to compute what your expectation of your loan amount is. It just simply says, show me what your expenses are, and then SBA essentially computes what they think your disaster need would be to keep your doors open. So you should approach it from the point of view that says, here is what my business needs to keep its operating expenses, payroll, utilities, insurance, other costs going for the 6-month period of time, extending into the future. And that's something that you're wanting to be able to keep in your mind, that that's what SBA is going to look to in approving an EIDL.
There's a question I believe I can answer. Is EIDL 30-year term or up to 30-year term? Oh, 30-year term, right?
It's up to 30-year terms. It's been, theoretically, the way it works is that SBA will calculate the term based on the ability of the business to repay the loan. So if your business has a very high cash flow and can repay the loan quickly, the term will be shortened to your ability to pay. Most cases, in this circumstance, I'm guessing most everybody's going to look to get a 30-year term. And so it is an up to 30 years, and in some cases, SBA reduces the term to fit the ability of the business to repay. It's based on repayment ability, not a standard amount. That said, most people do get 30-year terms, and just as a rule of thumb to keep in mind, it's 3 3/4%. It's a 30-year term. There's no fees, no prepayment penalty. A 30-year term at a $50,000 loan will cost the business about $230 a month. So it's something that if any business can make the case that an EIDL loan is something that they should get for their business, they should definitely do it.
Great. And then what to do if 3 days pass and no word on the EIDL, the advance?
Well, in other words, somebody applied for the EIDL online and they did not hear anything back in 3 days.
Right, correct. Yep.
I think at that point you have to reach out to the disaster office, because this is done as a disaster loan, and to see whether or not that your loan application had been processed first, and then if there's a question about why if there was any other issue. Usually what happens is that on EIDL loans, you'll get back something from SBA that acknowledges that the application has been submitted, and then you would get a contact from an SBA loan specialist that would be following up on your loan. But if you haven't gotten a loan number, because that's the key, you have to have a loan number when you reach out to SBA. If you haven't gotten the loan number, then you haven't gotten the loan application yet accepted.
So that sort of ties into the next question is, does everyone need to reapply if they applied before April 1st? Ha, 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 right? Big April Fool's joke to everybody.
I think if you didn't get a loan number, and I would say that you probably do need to reapply.
Yeah. Okay. If they did get a loan number, then they should call the Office of Disaster. And
if you have a loan number, you can reach out to the disaster office in other words, to get information on the approval status or the 10,000 advance. Once you have a loan number, then you know that SBA has accepted your application to process. It doesn't mean that that's been approved. It just means that it's something that SBA has in their system to process. So you can reach out to see, because you have a reference point, reach out to see where the status is.
So for the EIDL, and is the loan number different from the confirmation at the end of the application? I think you're going to have to reach out to the disaster office for that.
Yeah, you have to reach out to the disaster office, right?
Yep. And sole proprietors are eligible to apply for EIDL, but 1099s, is it still the case that 1099s and independent contractors are not?
No, they can apply.
For the EIDL?
Both.
Okay, good.
Yeah.
Okay, because they weren't.
There's confusion on the PPP side about that, but no, a sole proprietor can apply for an economic injury loan.
Yes, but not a 1099. 1099, unless that's changed.
Well, an independent contractor is what you're describing.
Yeah, yes.
So as an independent contractor can apply as well.
They can, because they couldn't. Okay, because that was not something that you could use when they first did the webinar, so that's changed.
Yeah.
Okay. All right. So Are you ready to move on to,
Sure. Sure.
okay.
So the source of a lot of questions has been the Paycheck Protection Program piece. And let's start with the eligible to lend side of it. And any community advantage lenders that are on the phone here, I'd be interested to hear if you've heard anything either way from SBA. But my general understanding is that any 7A, regular 7A lender that's already has what SBA describes as a 750 agreement, which is basically the agreement that SBA enters into with a lender that says we will guarantee your loans. Any of those folks, which should include Community Advantage, are ones who are should be able to do PPP loans. That does not include micro lenders. It doesn't include those who are CDCs that are not Community Advantage. You have to be a 7A player, if you will, to be in the space to do it right now. Now, as far as the non-7A the non-7A lenders, the ones who are not already in, any of those who have a federal regulator, so FDIC, OCC, Federal Reserve, FCA, NCUA, any of those, any part of those alphabets that apply to that lender can become a PPP lender, even if you're not currently an SBA 7A lender. My understanding is that those folks can apply and could be included in. The process yet is not something that I understand has been very spelled out. I think it's being described as send us an email. I don't know what that means, but it is definitely the case that you can get into the process. So what the case will be is that for amongst the CAMEO organizations that are lenders, micro lenders are not in. Community advantage lenders, my understanding, are in, and then of course regular community banks and regular 7A lenders are in as well. So there is a provision that the last bullet there is the online lender question, and that is actually probably correctly put because it's something that a lot of online lenders, even on their websites, are claiming that they will be able to do this. The legislation seemed to say that the Treasury would look at adding new lenders that are not in this space, if you will, of federally regulated lenders. The implication being some of the fintech lenders could possibly be in as PPP lenders. I have not seen enough guidance about whether that is actually going to be the case or not. I've heard a lot of interest by folks like Cabbage and Lending Circle and others that are out there that are interested in becoming PPP lenders, but I haven't seen that they actually have been approved to become a PPP lender. So as it currently stands, really, those who are already in the SBA 7A program in some fashion are the only ones that I currently expect are able to make PPP loans. And then going forward, we'll have to see about adding new lenders who are regulated, and then the question and further out there is are those folks who are non-regulated players that are lenders, basically the fintech players that are out there.
Yeah, Mark, I have some maybe some intel. I'm not, rumor, I guess, or apparently the application for these non-bank lenders went out today or is coming out today, and it's going to take a few days for the Treasury to approve. The people I've talked to, the online lenders, seem to think that they will get approved. Whether or not that's true or not, we don't know. And we can talk more about the cautions of sending people to online lenders afterwards. But
yeah, like I said, I think that process was something that was not already built into the system as it was first announced. So where that stands, I guess we will see as it develops here.
Okay.
I would say, though, as a sort of the word of caution that you're probably implying, is that for anybody who is a CAMEO partner and referring clients to sources to get a PPP loan, the first logical place is the bank, the business bank that they're working with, and then if it's not an SBA lender, you know, banks and credit unions can do this if they're federally regulated. So just have that in mind.
So I have a couple questions in chat that I do want to get to because it seems like now might be a good time. I heard from a community advantage lender in North Carolina that they had to have their CA agreement modified to be able to be a PPP lender. Is this accurate?
You know, I've heard something along the same lines too, but I have not seen that. I've heard that they were included, and then they needed to have some change before they were allowed to be included. I think my expectation is that they probably will, but they may need to get a modification.
Okay, CDFIs who are not 7A community advantage lenders are not necessarily in the program unless they're a credit. Some CDFIs are credit unions, then they would be. So, and then what about if you were ever an SBA lender in the past, like a one-off program from a few years back?
If you had a 750 in the past, you know, 750s don't usually get terminated unless for cause. So, but if you were in a non-7A program in the past, and there's a variety of SBA programs that were around before that no longer or have sunsetted, I would say probably not. If you're a CDFI that is not in community advantage, you could be doing you could be a micro lender and a CDFI, but if you're not in community advantage, then you probably are not going to be in this space.
Right. Okay, and then so yeah, just another note on the online lenders. They are accepting what they're calling applications of interest. They are not applications yet for loans, so they're just getting a pipeline. And are the loans saleable on the secondary market? The PPP loans?
Yeah, that's a source of some issue. The loans on the secondary market can be sold in the secondary market. You know, the provision, we didn't get down to provisions on the PPP loan, but the PPP loans are 1% loans. They're essentially designed, if the world works correctly, to mostly be self-liquidated, if you will. The loan would be made and then used for payroll, and then that loan amount forgiven, a portion of it for payroll would be forgiven, and actually other uses would be forgiven as well. So the intention is that these loans go out quickly, get used, and then forgiven quickly. But they can be sold in the secondary market for non-bank lender types, community advantage lenders that are non-depository lenders. The issue is going to be the 1% interest rate is really low to sell in the secondary market, and the secondary market isn't really designed as well for this. So I think one of the issues that people have expressed is that the secondary market should be okay as far as the regular 7A lenders, but it may or may not be something that works for community advantage lenders.
Okay, great. And there's been a couple questions I'm not answering just now that are for borrowers, so we'll get to the borrower side in a second. So just, so does anybody have any more questions on who's eligible to lend? Oh, and Nancy has some breaking news from another webinar. Advance is now being promised 2 to 3 weeks, and the rest of the app 2 to 3 weeks after. So, so much for 2 or 3 days.
Yeah. Thanks,
Okay.
Nancy.
This is okay. So back to PPP and lending, right? For the lenders. Who's lending? This gets to everybody's heard some of these issues, right?
Yeah. Yeah, and amongst the lenders out there, this program is out. It came out on Friday. Everybody was scrambling because the process, the interim regs, if you will, the way SBA puts things out, the interim regs came out Thursday night. They were to be used starting Friday morning. There were a significant number of community banks that were able to put some number of loans on the books on Friday. My understanding, a couple $2 billion on Friday. The bigger banks, the 4 largest banks, Wells, B of A, Chase, Citi, all took a little time to get going, but my understanding is that B of A has some, 177,000 applications in, upwards of 30 plus billion. Wells Fargo had to cap themselves at 10 billion, which was a function of their ability to lend. They are restricted in the amount that they could lend, so they lent as much as they were allowed to lend. They could ask for more. We'll see if they do. But in both of their cases, the volume has been pretty astonishing in the first really 2 days. So my understanding is a lot of the lenders that are out there are taking applications and are pushing them through, especially those who are doing it for their own customers. And that's really one of the limiting conditions that is going to be the case, is that if your lender is not either an SBA lender and takes a process to get them in, or if they're saying if they're not doing PPP loans and you want to find another lender, a lot of other lenders are saying they're prioritizing their own customers. And so there will be an issue about whether or not somebody is able to get access to the program if it's really going to be restricted to their own customers, and then the funds go through very quickly, and some folks are kind of left without a lender to be able to use.
Yeah. And yeah, people have privately messaged me, say we have clients locked out of this opportunity. That is going to be the case, and unfortunately. Can lenders limit availability to their own clients?
Say again?
Can lenders limit availability to their own clients?
They can. I mean, they can set a priority to their own clients. They're not required to take everybody, but they are, I think most of them, it's not unexpected that most of them will start by saying that they'll put a priority to their own clients. But what that does is that if you're not a customer of a participating bank, then a lot of those small businesses, and particularly really micro businesses, are going to be ones who are going to be penalized here.
Yeah.
So it's an issue that, and also the community banks are saying that they want to see a share of the whole PPP $349 billion reserved for community banks, because they see the largest banks gobbling up a gigantic share.
Yeah. And what about within the bank, like B of A, can it pick and choose which of their customers they want to lend to?
I mean, I haven't seen something that says that there is a reason that they can or can't do that, but I expect that they probably will.
Yeah. Okay. Let me know when you want to go on. Ready?
And the lender match is really is a online SBA.gov lender match, allows folks to go on and look for lenders, and that's being updated for the participant lenders. There's a large number of lenders that are in it. I saw a list of maybe 100. There's somewhere in the range of 4,000 community banks out there. So there's a lot of other lenders out there that are not clear about whether they're in or not in. So lender match is going to be updated to include who is a participant in PPP, but it's going to be a continuing process of adding lenders. I would say everybody should send their clients to their bank that they do their business banking with as a sort of the first entry point to the process. Let's see. The eligibility.
Oops, we lost Mark for a second. Mark? Oop, we lost Mark. This was not a good slide to watch Mark lose Mark. I'm sure he will call back in. I am going to lend or not to lend. Are you eligible? If eligible, is this a good product for you? If everybody will just give me 1 second, I think Mark might need the phone number. If someone who is co-host can...
should I text it to him, Heidi, or what?
Yeah, if you could, do you text him the phone number and the calling number?
Okay. All right. I'll be right back.
That would be great. I'm going to stop sharing my screen, and while we wait for Mark to get back, I am going to, let's see, exit full screen, and I am going to pop if anybody wants to possibly apply for and get on the wait list for the TA training online, I'm going to, that's the link for that, to take your TA online. And what were some of the other things I was going to pop? The other thing I'm going to pop into chat is a really good article I found in Forbes on how to calculate the money, which will go, how to calculate how much to apply for a PPP when we go with the, on the borrower side of the PPP loans. Let's see. Nancy says, please help us advocate to support the local CDFIs and community banks to get more capital. Nancy, we're trying. We are advocating. We're trying to get the thing. We are advocating, and we're trying to get more capital. Yes, they are definitely the rightful heroes. And Trish says, many self-employed don't even keep a business bank account. And that is very true. Well, then they will maybe have an issue. So unfortunately, that's is going to be part of the problem, and where the TA providers can really come in to play here. And a lot of the grassroots nonprofit books are not kept properly. There's a question on what is the likelihood of PP funds have run out? What are you telling clients whose community banks are still not able to get their PP application portals up yet? I don't think that the funds have run out yet. If Wells is B of A is just doing 30 and Wells is capped at 10, but if they've run out already, not sure. I'm going to let Mark answer that if he's heard anything else, unless anybody else has heard. I do believe there's lots of lenders who want to get into the game. So I don't think that they're going to approve new lenders, or they wouldn't open up applications for non-bank lenders today if they have already run out of funding. Clients whose community banks are still not able to get their PPP application portals up yet. Is anybody telling their clients to go anywhere else? Some people are telling their clients, there's a couple things like ways we can answer that. There is some software that I believe that originated from CDC loans that will help community banks as well as other lenders manage the loan process. And we had a little technical glitch here, so just hang on. So there is some software, and their clients, I mean, if we can find a lender who's doing loans, you can try and send them to those lenders. Or you tell them they're just going to have to be patient till their lender gets their client up. What we're about to talk about now is whether or not you're going to participate as a lender, and it's not clear that everybody is going to participate. I know some 7A lenders are not participating because you can't sell them loans on the secondary market, and these loans are not cheap. Catherine, I'll have to hold on that question. I don't know the answer to that. Can make an emergency loan from your loan fund outside of SB loans affect business eligibility for PPP or EIDL? I do believe that the PPP is going to be based on payroll, 2.5 times your payroll. So I don't think it has to do with how much other debt you're carrying. But the EIDL, I do know that it does The EIDL loan does take into account your ability to pay back. So that if you are, that's from the borrower side, yeah. So I'm not sure, it seems to me like you're meshing two different questions there. Will we give us a list of the lenders? The SBA lender match, it's changing all the time. There is, the list of lenders is pretty fluid. If we do know who is lending in the CAMEO network, we can put that up. But so far, I don't think that we can go beyond that, because but the lender match has a list by zip code. I think we have Mark back on the line, if I am not mistaken. And I might have to unmute him. I'm unmuting all the 707 numbers. So Mark, go ahead and talk.
Okay, are you there?
Yep.
Okay.
Thank you.
My apologies again for living in the 707 area.
We're just taking some questions, and we were talking about, I'm going to go back to sharing my screen. We were talking about, Catherine, if you could sort of tease out your question. It seems like it says, can making an emergency loan from your loan fund outside of the SBA loans affects a business's eligibility for PPP or EIDL? Does that mean if you're making loans outside, can you be a PPP lender? Is that what you are saying?
No, I'm asking if folks have already received some form of emergency assistance, if that will affect their ability to receive other emergency assistance through the SBA.
Okay, that's a borrow question, so hang on to that, okay? And then same thing, Todd, I'm going to ask you to hold on. I'm going to ask, the rest of the questions are all borrower questions, so if you guys can hang on to that, and we'll get to you guys in just a minute. So this is whether or not we're on to lend or not to lend. That is the question at hand. And Mark, take it from here.
Sure. Sorry, I lost you at this point. In this case, if you are a lender and you're interested in becoming a PPP lender, the first threshold is, are you eligible? And that's that question of, are you an SBA 7A lender, or are you a regulated lender from a federally regulated institution? And then the second question, even if you are eligible, the question is whether it's a good product for you. For those community advantage lenders, they have to make a decision about whether they have the capital to lend and whether the product is going to be a break-even product for the lender. So it may be the case that you could be eligible, say a community advantage lender, and make a determination that the interest rate, which is a 1% interest rate, and the fee on the small loans, it's about 5% for the loans under 350, and the ability to turn the loan over on the secondary market doesn't give you enough premium. There's a variety of factors there that you as a community advantage lender may decide that this isn't really a product that is a good fit. So it may be the case that the best thing for many people to do would be to really be able to help make good referrals to lenders who do PPP loans. Even if you could do it, you may determine that it's probable that it may or may not be a good product for you to do. So it's something that isn't an automatic something you should assume that you would want to do, even if you're eligible. But those are the kind of factors that you would want to weigh through if you're considering becoming a PPP lender.
Yeah, Mark, I have one little thing to add that I did hear from a lender is that they might, to make it break even, they might be seeking philanthropic dollars. So that might be a solution if you have someone in your community or philanthropy who wants to subsidize the product to keep these loans flowing. So that's
Sure.
another consideration.
Yeah, I mean, that's kind of outside of the system. But if there's an external way in which somebody has a reason to do it, that could be the case, and case by case, ad hoc.
And I'll just make one reference to make referrals to good partners. And I will mention this, we mentioned it once already with the online lenders. If the online lenders are approved and they have the capital and they have the capacity, the idea is that we prefer that you go to we suggest, not prefer, we suggest that you send them to an online lender who is a member of the BBOR, the signer of a borrower's bill of rights that do good practices. There's been some predatory lenders who have been accepting applications, and while this product is a good product for people, they're getting in that pipeline for what potentially could be predatory products down the line. Just want to point that out. Make sure you know who it is. You can I'll pop into chat the Small Business Borrowers Bill of Rights link, and you can put that in. See who's a signee. Okay.
Yeah, it's a good point. The online lenders, again, we will see, I guess, what Treasury does as far as adding them. But keep in mind that all of them have had, I'm certain, really difficult times with their portfolios. All of them charge rates that are higher than what is being called for in this PPP program. So this is not something that's part of what they would consider to be their business model. And all of them would presumably want to relend, the rest of what they do to some of these borrowers, and they may or may not be the same expectation of doing good lending that we would like to see. So
right.
I would add just those, elements of caution.
Yep. And then a question here from Catherine's questions from the lender side. If emergency loans are done outside the SBA guarantee, does that eliminating the PPP for the lender?
No, it shouldn't. The PPP process really, as far as a borrower is concerned, there's so little information that's being given to a lender. Are you in business on February 15th? Do you have employees? There's not a credit review. They're not looking at other kinds of credits that have been offered. It's not the same as the duplication of benefit concern that happens in the disaster loan program. So I would say that, emergency loans ought not to impact on whether the PPP part of it, should be affected by a community. In other words, a community lender that has a program that can assist somebody on an emergency basis, that shouldn't have an effect. Now, as far as whether those funds could then be used to repay that debt, essentially debt refinancing out an emergency loan, that may be an issue from the point of view of whether that loan, that PPP loan, is forgivable, because it gets into some detail here. But the only thing that's a forgivable part of the PPP loan of debt is the interest on a debt, not the principal. So that could be an issue that could be of some issue if you make an emergency loan and expect that emergency loan to be refinanced out. So just keep that in mind. That's kind of down the road, but it shouldn't affect the front end of it for approval.
Great. All right. Are we ready to move on?
Sure.
So now we can move on to the borrower. Everybody has a lot of people have a lot of questions on the borrower.
Sure. So the program is live, as we said. It's on Friday. We started making loans. I should say SBA lenders started making loans on Friday, and it's for the eligibility, of course, is what's spelled out there. Small businesses. You can get into size standards, but essentially it's really not something that is a big issue. The forgiveness piece of it is really what the big intent is here. Keep in mind that the application went out online by Treasury before it was eligible to be filled out. So people were filling out the application before it was actually available to people to submit. You should take a look at it online. It's pretty straightforward and pretty short. So it's not a long process application to fill out. And to my way of thinking, it's actually fairly straightforward to understand. The biggest problem on the front end of it, I guess you can get to that point, is really calculating for folks to calculate what the loan amount would be. I don't know if you have another slide on that.
Yeah,
Heidi.
we do. Before we go on, a quick question. Is there a resident, do you know if there's a residency?
In other words, you have to be a U.S.
US,
citizen or
yep.
have some green card documentation. Yeah.
Yeah. Okay.
And it can't be used for somebody that is the employee is outside of the country.
Right. Going back, just a little quick thing. The business is going to need documentation. So all the points about people put in the chat about people not keeping good records, well, that is going to be a problem for this, right?
Yeah, actually, the key, this documentation piece here, really what this is all about is calculating what the loan amount would be. And the loan amount for a PPP loan is going to be strictly based on payroll in the last year. There's there's a significant amount of confusion right now about whether withholdings and FICA should or should not be included in the gross number for the prior year's total calculation to calculate the monthly amount. So there's a little bit of a confusion there as far as I understand, and what I understand some of the payroll processing people are using is figuring that number based on gross. So that I would keep track of that as an issue because there's some question as to whether or not it should be the gross income or net of federal withholding and FICA. There's there's a significant amount of confusion out there on that part. But as far as the payroll, the example that Heidi is showing here, if your payroll, salary and benefits, is $12,000 a month, the calculation is $12,000 a month times 2.5 is the $30,000 loan amount. And then the way the $30,000 can be used, if 75% of it is used for payroll, that's a requirement that it would be that's the forgivable amount. The balance of it's forgivable as well if it's used for rent, utilities, payroll, and interest on debt. So if all of those are the things that are used, the PPP loan is used for, the entire amount could be forgivable. The limiting condition is that 75% of it would have to be for payroll. So that could be forgiven. It's for 2 months, 8 weeks period of time. So the entire amount could be forgiven if it's used for those things, with 75% of it used for payroll expenses.
Right. I just want to let everybody know it is 4:57, 4:58. We will stay on the line and continue to answer your questions. We do have a couple more slides, and there are a bunch of questions in the chat. So,
okay.
Should I go for? Okay.
Sure.
Can a sole proprietor apply for unemployment insurance and PPP, or is that double dipping?
Sole proprietor. A sole proprietor could have employees. So are you saying as an independent contractor, self-employed individual laid off from their work, or I mean,
I think
sole proprietors don't usually qualify for unemployment.
Right. So I think that was independent contractor.
Yeah. So the idea, the sole proprietor, that you are, if you are a sole proprietor and you are not applying for unemployment, so you could apply for PPP, but you can't apply for PPP for self-employed independent contractors until this week, until this Friday. I think is the date that the first date, April 3rd. Last Friday was for small businesses. This Friday is for individuals, independent contractors, sole proprietors to apply. So the process is a different process that's not yet available for them, but it will be available this week.
Yeah, and there is a way to calculate it. If you actually look at the Forbes article, they give an example. Not that not that the article is gospel, but it does give some good examples. It's the same thing. It goes about your average. You take your yearly, what you made in 2019 divided by 12, and as long as what you made in 2019 is under $100,000, you divide it by 12, and
That's your average month.
that's your average monthly. Yeah. So
Right.
it is.
And once you have your average monthly sorted out, and there's some other kind of adjustments too. Once you have that average sorted out, then you can pretty much figure out what the loan amount would be.
Yeah. Okay. Forgiveness of the EIDL affects the forgiveness of the PPP. This is kind of confusing. I think I tried to answer it on the next slide.
Okay.
Right?
Yeah.
I'm not sure it's
There's
clear,
a little bit of a confusion, on people who have applied for EIDL loans already and have gotten approval on an EIDL loan. And some of those EIDL loans typically are for payroll expenses. So in this case, the idea of the PPP loan would allow people who have already gotten an EIDL loan for this current period of time to have that portion of it refinanced so as to have it forgivable, with the exception of the $10,000 piece. That's a separate piece. So there's going to be a little bit of a confusion for anybody that's already applied for EIDL loans. Part of what you get approval for on an EIDL loan is for payroll. So if you are applying, if you've already gotten approval on an EIDL loan, and some of the amount is for payroll that would otherwise be, if you will, double covered by the PPP, then it refinances it out to cover it this way. It would be to the advantage of the business, because then that EIDL loan gets turned, if you will, into a PPP loan that is a forgivable loan versus a loan that is an EIDL loan that isn't forgivable. Sorry if that's confusing. So that's the example that Heidi's going through there. I want to just skip down.
There's some questions about seasonal business.
You're correct. It is way too confusing.
It is very confusing. There are some really good examples in that Forbes thing, and I also have a more confusing spreadsheet that I can send to you. There are several spreadsheets that a CPA firm have put together, tools that I found that we can send you in the follow-up emails to calculate the seasonal issue. And then there's a question about medical reimbursement plans excluded from the insurance amount, only health insurance included. I think because of medical reimbursement, you mean like an HSA or whoever asked that, or an FSA?
I didn't see that.
I don't know if that's the question. Do you know the answer to that?
I don't.
Okay.
I'm not sure what that's referring to. I did see something in the legislation or in the guidance on that, but I didn't really pick that up.
Okay, we can look into that. Do owner equity draws count as payroll expense for an LLC?
Yeah, it is. It's that's part of payroll. So that would be something that you are calculating into your payroll. In your 12 months of annual, you limit it to the 100,000 if it's more than 100,000. But if it's 100,000 or less, then that gets included in as part of payroll for calculating the amount to set the average monthly payroll. So yes.
Okay. I think we answered how to sole proprietors, independent contractors, if they do not have any staff, so a non-employer, and they do not pay a salary or wage for themselves. Well, they have a 1090. They have some. If they don't have, they have some kind of proof of income over the past year, and as long as it's under $100,000, you just divide that by 12, right?
Yeah, I would wait until Friday's there's a whole separate application form that's going to be necessary to be used for sole proprietors. They're going to use, so that information is something that you'll see that eligible on Friday.
Okay. Mark, I think the biggest question, this EIDL stuff is, so this is if someone has received in advance, the example that's already up here.
Right.
I think maybe it might be worth for us doing some pencil and paper, some scenarios down and seeing how they work, right? If you have not gotten an EIDL loan, let's say you get an EIDL loan and you're going to pay two months of payroll expenses with your EIDL, with your PPP loan, and you apply for months, and you think you want your 6 months buffer. Would you apply then for another 4 months of expenses?
Yeah, I mean, I think one of the things that people need to keep in mind is that the PPP part is really only for this 2 month span of time, and while it actually covers most of the things that an economic injury loan would cover for this 2 month period of time, it only does it for 2 months. So applying for an EIDL loan makes sense for people to do in addition to the PPP piece. It's just that they can't cover the same uses for the same time period. So if an EIDL loan comes in and says, here's what I need to keep my business functional and operating after the PPP period, that would be what they should apply for. And they would also then get the $10,000 advance, but the idea would be that the PPP part of it is really strictly it has more of a formula around just paycheck protection rather than other expenses like rent. So if you're a business that has the majority of your costs in other than payroll, rent, for example, is a big one for some businesses with few employees but an expensive rent bill, then EIDL would be part of what would be useful for that type of business, because PPP, if it's limited to the forgivable part of it is limited to 75% for payroll, it won't be entirely forgivable. So you should probably figure applying for both if you see this to be something, as most people do, that this will continue on for a period of time. But the payroll coverage piece of it or actually all of the PPP piece of it is something that the EIDL loan should not be covering, because it's a separate period of time that is covering it.
Got it. And then for seasonal business, is average monthly payroll based on 12 months or peak months?
There's a separate formula for
seasonal
businesses in there, so
okay.
I'd refer people back to that.
To the formula, okay. And I do have that worksheet that I will send out.
Okay.
That was a lot of information. We will for sure send out I took some notes on some things to send you all. If you want to hang on, I'm going to stop sharing my screen. Oh wait, I think we have one more slide. And we talked a little bit about each one of them.
Yeah, exactly. Documentation needed, the biggest one being the payroll information. So folks who have payroll processing being done externally have a big advantage, because that's something that they're prepared to respond to. People who internally do that, and it's particularly a concern for businesses who their payroll is done by their sort of internal bookkeeping or cash businesses. There'll be a concern there in getting that documentation together. It's going to be an area that clients are going to probably need some help with. And then you do want to see what time frame, but in this case, what you're really looking to do is this is what a bank is going to be needing to get to document themselves to show that they have had the information correctly provided. So the banks have gotten a little bit of a leeway on whether they have some liability if the documentation wasn't right. but they still are going to be necessarily picking up that information, payroll information. And then I think we covered the compensation is for those under 100,000 gets included. So if one of your employees has a salary of 110,000, you cap it at 100 when you do the calculation. The federal tax imposer withheld comment there is part of the confusion of whether FICA and federal withholding should be included in the total. And I think I've been led to understand that it should be included in gross, not just net of that. And then sick and family leave is allowed. Heidi's comment, don't pay anyone to put an application together. It can be done. It can be charged and paid for by the lender. That is something that is provided for. There's a cap on the fees. It can't be charged to the borrower. It can be charged from the servicing fee that the lender would get. So that could be done, but it's something that most people and with TA providers should be able to do without having somebody have to pay someone for that. There's a lot of concern out there about fraudulent things going on. It's just there's so much money that it's inevitable that there's going to be some issue out there. So just be careful on that. And then if we get to using online lenders, as Heidi said, make sure that they're part of the borrower's Bill of Rights.
Yeah. I'm going to stop my screen share right now and just if there's any questions or anybody wants to say anything. Brian Kim just wrote in the thing about advocacy, there's no better advocacy than calling your legislators, sending them the story of your small businesses, your clients that you're working with, that how this is and why this is not working for them. We can talk to legislators, and we are, and we can talk to the SBA, and we could talk to people in DC, but really the legislature is where it's getting those stories to your Congress people is super important. If anybody, there are a couple of questions in the chat. There are a lot of webinars planned for the public. I know the SBDCs are doing some webinars. So you should, I saw something today come over from the Orange County Inland Empire SBDC. I do know that they're doing the webinars. So send your, you can Google them. It's pretty easy. Let's see, another question. Example of gross versus net on PPP. Mm-hmm. You want to answer that?
Yeah. The confusion is that there's the question about whether federal withholding and FICA withholdings should or should not be included in the, if you will, the monthly payroll number. The monthly payroll number is the one that drives the loan amount. That's that average monthly payroll for the last year times 2.5. That's the loan amount. So it's the average monthly payroll amount is a key starting point for figuring out how much the loan would be. So the question, there's some mixed information that several people online in the accounting world has been complaining about it too, about it looks like you're supposed to take out withholding and take out FICA from your average monthly. But it does not, if in other parts it makes it clear that it should be the gross. So the average monthly salary and benefits, including FICA and including federal withholding, should be the amount that you're looking to come up with. So you're looking to come up with that total gross, including withholding, not net, which would exclude FICA and federal withholding.
Great. And Nancy, yeah, encourage it. Someone asked if someone's charging to make sure paperwork is correct. First of all, I don't think that there hasn't really been any applications as of yet. They've all been letters of interest. But I don't know, we don't know, and we say don't pay for them, and go to one of your women's business centers if you have one in your locally, a community organization or a small business development center. They will help you for free.
Yeah, I would reinforce that the legislation makes it clear that borrowers are not expected to be paying to have an application put together for them. And if a lender is saying someone will do that and we will on their behalf, and we as a lender will pay that whoever that provider is, that would be something that the borrower should not be expected to pay for.
Correct. Yes, nonprofits and yes, nonprofits should apply for the PPP as well.
Right.
Absolutely. I popped into chat the Borrower's Bill of Rights, where you can find a list of responsible lenders and some online lenders. I'm popping in now a link to, if you scroll down to the bottom of the page, there's 3 PPP loan calculators. I'm not endorsing any of these. They're just something that I found on the web from a CPA organization. They do show you the seasonal business calculator. Let's see. What else was I gonna? And yeah, I gave you the Forbes article. And so I found those resources helpful. I think we're gonna, it's 5:16. I think we're gonna call it a day, Mark, unless you have any last minute words of wisdom you wanna depart into our attentive audience.
No, I would just suggest to everybody kind of keep, as I said from the start, keep track of where the status of things are, because this is moving pretty quickly, and there could be some changes in either the process or what probably is more likely is that a second round of PPP money would likely be the case if the first tranche of money gets used quickly. So keep track of that as the process changes. The forms also are likely to change. They've already changed in the last couple of days, so it's a moving process on this one. And good luck to all the TA providers and micro lenders out there, because your clients really need it. So you're doing the things that are needed at the right time.
Well, thanks for all the kudos, you guys. If there's something else that you want to know about, please do let us know. We will do our best to address the topic, whatever that may be. Here, I'll pop my email into chat. Note that, if there's something you're struggling with to understand, let me know. And we'll try and put some together if we're not the experts, because we are expert in knowing what we know and knowing what we don't know. So we will find someone who knows what we don't know, if that makes any sense, everybody. So have a great night, and hopefully we'll see you guys on Wednesday. We're going to have a little update from federal folks, and as well as from the state. So stay tuned, look out for the email, and we'll make sure we put the link in to register for that as well.